Hello, Face. How's everyone doing?
Morning,
Hugo,
Dale.
how's it going? How you, Ryan? And Richard, Brock, all my trading warrior brothers and sisters. Everyone doing okay? So I want to tip my hat to Blake. Called out the yen short live yesterday. Did some before. I think he did a pip here. That was a great call. And also, Ryan, tip of the hat to you on the yuan. I hope you survived this. To me, this looked like a little stop hunt right here. And the launcher trying.
Thank you very much.
Trying to grind something out of there, buddy.
Yeah, I got a little dip bid in the other day, 36.70. So
and maybe we're not going to go for week for a third drive. Maybe I've seen 2 be enough, Ryan.
Yeah.
Anyway, Crude's trying to bounce back. They're still talking about releasing some crude from the SPRs. It's kind of a negative week. Again, you know, it's had kind of 3 negative weeks, but it sure hasn't given up a lot. I know because, you know, I'm still short and I own some of this stuff. It's triple ETF on the crude, and it's been grinding up. I'm actually was looking to cover up here.
Yeah, great short there as well, Dale.
What's that?
Great short there as well, mate.
Yeah, it you know, they didn't really you know, it doesn't give it up. That's how you know it's a bull market. And also I looked, it's still in backwardation. So I mean, you know, it's not the smartest short when, you know, a commodity market's in backwardation. You're really fading things. Hello, Raj, and congratulations to Stelios, who stuck to his guns and made a switch from dollar-denominated whatever you were doing into euros yesterday, and that's discipline when you wait for a level, and the level gets there.
It's nice when it works out, right? It's really nice. It doesn't always work out.
Yeah, especially when you wait for a year for your level. You've had plenty of time to mentally prepare for what you're going to do when it gets there, don't you think?
Yeah, true. You know, some people can't trade like that, though. They want to trade every day. That's not me.
Yeah.
But
yeah. You know, I don't mind not trading. You know, so you know, some people, I know what you mean. You know, they're like, I got to find something here. I need to make. I have to meet my quota. What should I do here?
That's I had a conversation the other day with a friend, and we're talking about what we think the worst trait is for a trader. Why do people fail? And we agreed that the worst thing, the reason why most people fail, is impatience. End of story. You get into trades that you really shouldn't be getting into, and then you know you want results quickly, and they don't happen. Then you leverage. Then you know what happens next.
Yeah.
So,
yeah. You know, it is because that creates FOMO. That creates impulse trades. That creates forcing things all the time. You know, what works even in your life when you force it, right? Let it come to you. I forgot what the saying is. There's nothing to do. There's nothing to force. There's nothing to desire, and all comes by itself. Take the pressure off yourself. So anyway, nice call on the yen, Blake, and Kman, if you're around. What do you think of the sell-off? Has it changed your view? Anything going on that Faye should know about in the end?
Well, thanks. Well, I'm going to just say this about Kman. He's got his microphone on or off, but I think he's in the chat room. He's actually looking at comments.
There he is.
South African Central Bank. Hey, hey guys.
Yeah, I'm just busy on those South African Reserve Bank comments. They have to publish their interest rate decision in the next minutes. Usually there's always comments ahead, which are filtering through now. Not really a lot of new. Not really a lot of fresh news that I can see straight away, but the interest rate decisions should come out every minute from now.
Yeah, this is the this is what the rand looks like, and I want to show you kind of a longer term chart of the risks that are.
Pretty.
Yeah, you know, this is a big move. I mean, if you think about like this head and shoulder completing, I was talking about this yesterday with the guys over at Pepperstone in Asia last night. You know, this is a 12% move, you know, 12, 13% move to complete that inverted head and shoulder pattern. That is a huge move over the course of several months. I mean, it's not something that's going to happen like intraday, but this is you think about the base it's been developing all of 2021. This could be a real explosive move if we get above 1575. That's really the breakout point. And that's something that has been on my radar. And, you know, it's just going to accelerate. I mean, today could kickstart it following the rate decision, but more importantly, it's something that that could really move. Should there be?
Does it correlate with gold at all, guys?
Not that I've seen.
Okay.
You know,
I mean,
maybe the Brian or Kman may have another opinion there. Yeah, but I'll leave
that to Kay. It's a funny one because it's obviously they're a big gold producing country, aren't they?
Yeah.
Yeah, but I don't see any direct correlation personally. But
all right,
you know, maybe that's
fine.
Hey, but you'd asked a little bit about the yen, and thank you. Yeah, I actually shorted that yen yesterday. It's funny. Well, it's not funny, but what's interesting is, you know, if you look at my, I say my blog, our blog, you know, but my chart of the day that I had on, I guess this was Tuesday. You know, this is a bull flag pattern, and I was very much looking for a breakout. And when, you know, I went to bed, the dollar yen ripped up a little bit further, and then when I got up in the morning, you know, we were down at you know, 114.69 because that's where I shorted it, because I was like, oh, this is a false breakout. And then, oh, look at yields, and I'm like, oh, you know, this is Europe's rejecting this. And then obviously it fell last night, and my 2 cents are, as long as it stays below 115, we should get a reversal here. But I'm still short, or I'm long yen. But what's interesting is I was looking for it to break out, but that false breakout is going to leave. And this is one of the things that I think we have to look at. And I'm going to pull it up on a different chart here. Let's go to, I want to pull it up on a different feed and show you a weekly chart. And let's.
Thank you, Jane.
What's that?
Oh, Jane's saying huge in iron ore. Oh, and Bernard lives there in South Africa. Rand correlates directly to some of the idiots in our government.
Yeah, you know, Jack in our chat room. Jack has been there for. Jack has been in our community probably for, well, even before we were ForexAnalytix. He'd been chatting with me in my old chat room probably for like 7 or 8 years. And he was in South Africa up until, I want to say about just before COVID. So maybe like 2 years ago. Then he moved to, I want to say Norway or somewhere, but he relocated his whole family from there. And he's just like, you know, the things he would say about the South African.
The big deal.
Yeah, it's
to leave a country.
Yeah. I want to go back to the yen. This is a weekly candle. And, you know, depending on where we close the week now, obviously today's Thursday, but, you know, we close a little bit, you know, down towards 114. We're at 114.19 right now. So just think about 20 pips away from where we're at. You know, that's going to be a gravestone doji, shooting star, however you want to look at it. Depending on where the candle closes, it's not a good look. It's not a good look that we had a false breakout. So anybody who's long, you know, the yen, or short yen, but long dollar yen, or whatever case may be, that is not looking too good at currently. But, you know, there's still a day and a half before things develop. But that hasn't changed my mind there. And, you know, if you guys are if you guys are part of the ForexAnalytix community, I know you probably know that I've been buying some euro dollar here over the last few days. It is counter trend. So I'm actually playing the dollar to the short side. And, you know, the dollar's been a great long for me and for a lot of traders really over the last month. I mean, you know, we've been playing it to the long side. You know, percentage wise, it's made a big percentage in my trading for the last month. And I'm now trading counter trend, and I'm shorting the dollar, and I'm taking smaller positions. This is one thing that you got to realize, is that, you know, the trend is higher here. And if you're going to go counter trend, make sure you take a little bit more or a reduced position size there. So anyway, those are just my thoughts. So Stelios, Ryan, what are you thinking today as we go into Thursday? It's not a lot of data today. We have like Philly Fed. We've still got the we've got you know, jobless claims, but we're still waiting on the Fed to, or the Biden administration to announce who they think is going to be the next, or should be nominated for the next Fed governor. You guys have any thoughts going into today?
Just watching the levels, really. You know, we spoke about euro dollar yesterday, around about that 1290, 1300. It's held. You know, and as we said, if it's going to hold there, then we should see it higher. But it's not exactly springing, is it? You know, it's looking pretty weak, and that's been the problem all the way through.
Guys, sorry to interrupt. 25 basis point SARB hike to 3.75%.
Thank you. And so that was expected.
Governor, most of the analysts were for a hold, but he said just a minute ago that Rand is trading below its equilibrium rate.
Really?
So dollar Rand capped right at the 1566, which I showed in the room, trading around 1561 right now.
Okay, I just took my Rand off. I was long,
Split.
and I just took it off.
Split decision, by the way, 3-2.
What's that?
Split decision on the interest rate, 3-2. So I guess it was a close call for the hold.
Got it. I still think that this does rally, but if he's commenting that it is below what he sees as equilibrium, then I think there's potentially going to be a little bit of pullback here. And one of the other things, and I'm going to I'll just say this because I already said it already, but I'll say it again. You know, as long as stocks are holding up, there's no real reason, no urgency really to sell the Rand or emerging market currencies in general. So, you know, I do believe that if stocks really start to show some, you know, get some teeth and show some downside, then you got to be looking to sell Rand. But from a macro point of view, and based on what central bank, the central SARB is saying, I don't know if I really want to be short Rand right at this very second in time.
How about S&Ps? I noticed one of the star traders in our members chat, and I don't think that star normally trades S&Ps, but I've seen her. Whoops, I gave the clue away. Laying on some shorts.
Oh yeah, you know, Amanda actually just.
Oh, you said her name.
Yeah, she's not in the chat room today. I think she's
okay.
Yeah, she had.
Does she hold stuff when she's away? Being a mom.
Yeah.
She position trades. Okay.
So when I put in this pattern in play right here, this bearish pattern in play, that was on what day is that? The 5th.
Okay.
Right. So you're talking about, you know, 2 weeks ago.
Yeah.
That's the day that she started shorts in the.
I like that trade.
Well,
if it works, I really like it. Huh?
It's all fine and dandy, but I mean, you look at the last 2 weeks, we're still here. We haven't really moved anywhere, and you can't get excited about S&P downside unless you start breaking through some supports and giving us lower lows. But right now,
I like your objective. Is that the prior high 45.50? Prior
yeah,
high
that'd be
back
right.
in the
That'd be
summer.
right here. That's the
Yeah,
breakout.
okay.
But we're holding the 161% extension, but at the same time, we're not rallying, or we're not selling off either. So I don't know. You know,
Yeah.
the S&Ps, they're here. They're at 4,700. I think right now the S&P or the stocks are really waiting on who's going to be the next Fed chair.
Oh,
I think that's what we're waiting for, and we're gonna sit here and wait until that announcement is made. And I'll reiterate from what I said yesterday: if Brainerd is nominated, I don't think the markets are going to like that. The market's going to look at her and say, "Wow, she is super dovish. She is going to single-handedly, if confirmed, produce more inflation in a slowing economy globally, slowing global economy as things start to slow down in China, as the U.S. is probably, we're near full employment again. It would threaten a really higher inflation from current levels would threaten our economy, and then we see stagflation. So I think actually Brainerd would be negative for equities. And I know a lot of people look at that and say, wait, she's dovish. How could a dove be, bearish for equities? But I think she would be. Powell, this just is more of the same. So that's why I think the markets are just waiting, because they're trying to figure out who's going to be the next Fed chair. So just to
go back on the SARB, this is yet another central bank hiking on inflation worries. They're all going, and this move by the SARB has just helped send dollar Turkey up through 11, because meanwhile, when everyone else is hiking on inflation, they're easing. They cut 100 basis points, and it's 50-50 on when they do it again in December. It's bonkers, absolutely bonkers.
Yeah. So I mean, with central banks doing what they're doing, did we talk about? It's weird when we do this webinar, which is obviously the free face webinar. We also do the morning edge, which we go through all the major currencies and all the major markets, and we spend time with the ForexAnalytix community. We go through that in about an hour's time. I can't remember if we had the conversation yesterday or if we had it or not about Brainerd and Powell. What did we have?
Yeah, we did have it. We had it yesterday. I think
we had it here.
Yeah. Speaking about that, I tend to agree with you, but I'm finding it hard to see how any of the two are really any different, and I take Powell as an example. He started off being really aggressive and hawkish, and we were saying, this guy could be different from Bernanke and Yellen, and in the end, he became more of a, he was such a disappointment.
Yeah, then he got the beating.
Yeah, and
he got the Trump beat down. He got beat up into oblivion, and then COVID happened. I mean, that was black swan galore. I mean, the guy was a hawk coming in.
Yeah, he was.
Got the beat down,
and he changed. And man, you changed, man. It's not good. So, but this was actually from a scene from Beverly Hills Cop. Whoever remembers, Philip, you changed, man. Anyway, don't worry. You go look it back. Look it back. You'll find it when I go into a strip club, basically. Anyway,
wait. Too much information. I got to stop really quick. Wait. No, I just read a comment. Ronit said COVID was not a black swan.
Was a follow-up to currency, but
wait a second. Wait a second.
What was it? An ugly duckling?
Yeah, I know. Wait, did you see it coming? Did you in your crystal ball? Did you see it? Okay. So, all right. I can't say anymore. I'm gonna zip it. No one saw COVID coming. Sorry. I mean, I'll have to say, about a month and a half before we went into COVID lockdowns, I did buy a huge bag of rice and I bought a bunch of toilet paper because, we saw it coming. right? But no one saw a global pandemic coming. That is what you call a black swan, right? And it was more of a black swan was the lockdown response to that. So that's and that's why the market sold off. What was that percentage? How much did we sell off that day, or once lockdown happened?
40%, 30-40%.
I mean, yeah. So that's what you call black swan event, when people can't anticipate those things happening, and then there's a big market response. So that's what it was. Sorry. Crisis or no crisis, if you say it coming or not. It is what happened. So
anyway, bottom line, I don't think Brainerd or Powell are very different. Yes, short term, maybe the market will try to anticipate and do this and that, but really, I doubt they're going to be different. I hope I'm wrong, but I doubt they are.
Yeah. It's, the thing is we'll see it. We'll see it. The proof is in the pudding, right? So the proof will be in the pudding in what happens with, what happens with whatever Fed governor, or if there's a Fed chair that's put in and Brainerd's ever put in. But the thing is I have to say that I think she is, she's obviously very dovish, and I don't think the markets are going to take that kindly. I mean, I think stagflation is a risk for global economies, this persistent inflation and slowing growth. And I think that is going to be a bigger issue going into 2022. I was just reading a research report from Morgan Stanley the other day, and it's pretty dire going into 2022. And I think that those are some risks that the markets are really going to be facing. Oh, geez, the yen.
I think Morgan Stanley, Blake, was looking for about 20% when we were peaking in August, September into the end of the year. And they're still bearish. So even though their timing was, I mean, I didn't know that till I heard you say that. But, people go, oh, well, they were bearish and they were wrong. I look at it, they're not dumb guys. And their timing was wrong, but all the reasons for it are still there. So that means something to me that they still have conviction. How about you?
Look, an analyst is an analyst, right? They're not. I mean, analysts are paid to make predictions, and then if the predictions are wrong, they're just going to make other predictions. They don't actually trade, right? So that was a good one. Case in point in 2020, at the end of 2020, when every analyst
bearish dollar.
Yeah. Bearish dollar. I mean, that's it. And here we are, new highs in the dollar. So, that's it. Right. I don't read too much into it. They're just opinions, and then you just take it for what it's worth, because, when you read like research reports, and for me, I talk to obviously a lot of traders and economists and strategists. That's what I do on a daily basis, is, doing a lot of these interviews now. And everybody's got opinions, but it's giving you like a thesis to think of as you're trading around. Damn, this dollar max is, I'm short Mexican pesos, so I'm happy about it. It's just I don't want to chase it higher, but we're breaking this triangle resistance, guys. Just so you know. So by the way, the dollar rand just hit new highs too. So that's a little suggesting that there's some risk aversion. By the way, one of the other things that you should be watching right now, that should be on everybody's radar. And I'm sorry, Dale, I didn't mean to dismiss you. It's just everything's starting to happen right now. You guys watch crude oil, because if crude breaks this 38% retracement, it is going to absolutely crap the bed. Everybody that I talked to over the last 2 months has been targeting higher crude. Everybody's looking at 90. Everybody's looking at 100. And we are at the breakout point. And so if we break below this 38% retracement, you have to have some sort of exposure. Like I bought yesterday. If you're in the ForexAnalytix chat room, you would know this. And guys, this is the difference between making predictions and actually trading. right?
Yeah,
So you go into the chat room and you go look at like my Euro Norway exposure yesterday, because I knew that this crude was breaking lower, and so the way I'm expressing that, rather than shorting crude, because I'm just not, I've never found myself a very good crude trader. The way I'm expressing that is getting long Euro Norway. So,
That
buying
works.
it down here yesterday, below 990, looking for a move, up towards, 1050 is actually where I'm targeting. So you guys have to figure out how you're going to express your, how do you make money? You can make guesses all you want. You can theorize about the markets however you want, but how do you make money doing it? That's the ultimate question. That's why, in the ForexAnalytix chat room, that we're in the trades room, you can clearly see exactly what we're doing. So, anyway, and by the way, I shouldn't have pulled the rand off. Kman, you know what? I'm gonna point my finger at you. I wouldn't have done that if you didn't say anything. So I'm just gonna go ahead and blame it on you. You're
I'm long. I just sold a part of it ahead of the resistance, but I'm still long. I told you I was going to get out again.
Well, you didn't tell me now. You told me now. You're telling me. You didn't tell me like 5 minutes ago.
Go back into your famous trades room. It's all in there.
I like harassing you. Anyway,
but by the way, metal's getting slammed again for no apparent reason, the usual.
And that's another thing. Everybody's bullish. Gold and silver. Everybody's bullish. I mean, we got this technical breakout above 1834. Everybody's like, oh, gold's going to go. I still am in the camp that it has not been moving, and it's just not moving. And I guess, we have all this inflation. So why isn't gold moving? I don't have an answer for you, but I will tell you that I don't like how it's not moving, and I'm not long it, but if I was long, I'd be a little worried. Also, one of the other things that I'm looking at is I'm looking at Bitcoin. Bitcoin should see the low 50s again. So probably channel support down here after the false breakout. That's something that, we've been looking at as well. If you guys are long crypto, I don't think this is the place that you want to be long, especially with false breakouts and with some ascending wedges breaking down. Completions of cup and handles finally completed here. We've been waiting on that for like the last month. You got to be real careful with everything that's come to fruition. And I think that, by the way, the dollar is getting a little bit of get up and go here. Almost across the board, by the way. Look at the Aussie. And one last thing, I'm going to leave you guys with this. And then Stelios Stelios and Ryan and Dale, if you got anything else you want to mention, please bring it. Copper has been really on my radar. And yesterday, I'm like, hey, we broke the 200-day moving average. We were right here, yesterday midday. I'm like, we're breaking the 200-day moving average. Then we sliced through the 618 retracement. Now we're down. We're below this broken trend line that we had tested not only once, twice, 3 times, 4 times. Yesterday, snapped its back. So if you're long Aussies and you're seeing copper break down like this, you have to be very, 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 very careful with being long Australian dollars. I think the best way to play that is actually through a cross. But the Aussie dollar, for those of you that haven't caught it, we finally completed the bear flag pattern. If you don't remember, I was very public about being short Aussie dollars up here at 75 cents. And we've been looking for completion down here. I didn't know how it was going to happen. And I definitely did not think it was going to complete down here with stocks at all-time highs. But here we are. And so if stocks actually do see some weakness, I'm only imagining at this point that the Aussie is going to be challenging 70 cents again. So that we're going to eventually break this channel. I didn't think we'd make it down here with stocks as strong as they are, but they are. And that's the fact. And if you're long Aussies, you're probably crapping your pants right now going, why am I long Aussies with stocks at all-time highs? And we haven't even seen a pullback yet. Because if we see a pullback, these are going to get destroyed. These commodity type of currencies. And even in an inflationary environment, why is the Aussie underperforming? Those are all questions that anybody who's long Australian dollars right now is asking, I'm sure. So anyway, Ryan, Stelios, Dale, any last comments before we let you move on to?
We have US data coming out right now.
Oh yeah, thanks.
Jobless
Thanks.
claims.
Why don't you just interrupt me, Stelios? You should.
Jobless
Just
claims
kidding.
in line. Philly Fed, I don't see yet. I don't see it.
Strong Philly Fed 39.
39. Okay,
39.
that's it. That is strong.
Versus
That's
24.
what put the bid in this dollar yen, I think. So, and by the way, the dollar yen, you probably want to look for a sell up around 14.55. I was writing
And silver
14
negated the breakout, Blake. I think that's important.
Oh, are we below 24.80?
What we talked about yesterday?
Yes.
Yeah.
Okay. Yeah. All right. So, yeah,
they're trying to force.
that's ugly.
They're trying to force longs, basically, who got long breakout to
Puke.
close out. Yeah, it's fine.
No. They're just trying to force Steli out of his position because they
I'm-
know
They
when you
can't.
get out, it's going straight up.
Never.
When you get out, just kidding. Hey, and kudos to you. You've been,
So
bullish.
stubborn.
You've been stubbornly bullish silver for a long time and right. So I
Yeah.
don't want to take anything away from that.
The main thing is when it performs to actually make a move and do it. Like when I got long at 15 and a half ish, I got out at 25 ish or something like that. Then I've got long again. So you have to get in and out. You can't carry something forever. I carry trades for a couple of years sometimes, but you have to, when it actually works out, you have to do something.
Yeah, I mean, that's the thing about when you're trading, right? And if you're trading into a trend and a thesis, an idea, when it's bullish, or let's just say it's bullish and it makes a move higher, yeah, you take some profits along the way and it dips a little bit, but your thesis hasn't changed and you buy the dip and you buy into to weakness and you spin out of it and try to keep a core position. So well done.
Nothing more transitory than trading.
Right. All right. So, hey, Dale, have a great interview.
All right.
Ryan, Stelios, Dale, thanks for spending your time with me here over the last 30 minutes.
I enjoy it, Blake. Even though I hate the alarm clock, I like it here. Anyway, it makes my day to hang out with you guys and talk to people like Bruce Fraser. Bruce, welcome back to Face. How are you, buddy?
Oh my gosh, so good to be here. Thank you so much.
Nice to have you. It seems the rotation's getting a little longer and longer. So if you want to take over the screen, someone has to stop sharing and then you could take it over. How have you been, buddy?
I've been pretty good. Yeah, I've just been sort of like staying close to home, looking at charts. So waiting for this. I've just been waiting for the opportunity to hang out with you guys.
Oh man, I'm blushing. Well, I think we have I think we're the beginnings of a beautiful bromance. I
don't
like
even think
you.
it's the beginnings. I don't even think it's the beginning.
I'm already mailing my ID bracelet to you, Bruce. So I like you, but I love your work. Okay.
Well, I've been sitting here listening to Blake and everyone, and I have to say that I'm going to try to continue on with the theme that you all are talking about, but I'm going to take it from a completely maybe different perspective. Hopefully attendees, people will enjoy sort of a different view of what's going on. A little bit of a discussion about the stock market right at the beginning.
Okay, so we need you to see your screen.
Okay, so I'm still seeing a screen.
Yeah, Blake needs to stop sharing. Let's see.
I don't think I want to stop sharing. I'm just
Blake likes to share.
Oh, be a giver.
No. I think I'm just going to keep it here. Sorry, guys. No, just kidding. All right. Sorry,
Thanks,
it's my fault.
Thanks,
you guys
buddy.
have a great interview.
All right.
And thanks for joining us, by the way, Bruce. Appreciate it.
Yeah,
thanks, Blake.
Bruce is top shelf.
Okay, here we go. Let's see what we get here.
Drum roll.
See that?
Coming up. Yeah.
Okay, beautiful.
Okay.
All right. So just to start, first of all, thank you, Dale, for having me. It's always just a real pleasure to be here. And in, continuing to talk about inflation trends, I hope, though, that the perspective that we talk about, this is going to be kind of a white coffee and case study, is maybe a little different perspective, and it's going to be very long-term in its orientation, but let's just have a look here. First of all, I just want to say that there's some great free content out there. I blog at stockcharts.com, and all of my blogs are not behind a paywall. You're welcome to them. I've got them back to like 2015 or something. And so just go check it out. And you can also just go to the stockcharts.com, go to articles. I also do a lot of videos for them, and the show I have is power charting, and those are also available to anybody.
Oh, you're on with David Keller?
I'm going to be on with him today, actually.
Yeah. Okay.
So so I get to try this stuff out with you, and then go on with Dave. Dave's an old friend. So anyway, also we do a weekly Wyckoff market discussion. Roman Bogomazov and I. He's a great white coffee and great educator. He and I taught together at Golden Gate University in San Francisco for many, many years. It taught the Wyckoff method. So anyway, you can go to Wyckoff Analytics, and if you want to attend, check it out. All right, let's get started. So NASDAQ 100. Dale, this is a chart. Now, my orientation is pretty long-term, I would say. I tend to try to find trends and follow them. One of the ways I do that is with point and figure charting. This is a vertical chart, obviously. And so you can see here that there were a couple of really beautiful reaccumulations in 2021. And so this one here in February, March, really had a nice structure to it. And then also this one in May, June had a great structure. And so look at this. So I put the count in, but I'm going to show you this count in just a second. But I wanted to give you the context and then ultimately what happened, because we love it when this kind of stuff happens. So anyway, here we go. So this is, of all things, this is a point and figure chart, 30-minute intraday chart, 3-box reversal method, meaning that you have to have at least 3 entries in a column before you can move onward. Point and figure, I'm actually doing a workshop on point and figure for power charting right now. It's a 2-part series, and it sort of shows how to construct them. Anyway, here is the NASDAQ 100 3-box method, 20-point scaling, and this is that May to June period, and look at the count that we got. So here was what we call a first segment, and this did a really nice job of picking this up. But this count here went up to 16,420 at the high of the range, which is this whole area in blue right here. And this took us up to the 16,420. Well, look where we just hit, 16,454, which is a pretty darn good hit. It's about 1 box above the high box here on this count. And so we did this chart initially on June 21st, first day of summer, I guess. So anyway, now here, let's look at the triple Qs, which is just another way to look at the NASDAQ 100. And so this is that February to May period here, and here, this chart here is this period right there. But you can also see that this also confirms that same count. But look at the stair-stepping action in these horizontal point and figure charts. Classical Wyckoff technique. This count took us right up to this peak here, where it spent a significant amount of time, built a new cause. And our view in Wyckoff is you have to build a cause to get an effect. So you build a cause of accumulation to get the markup effect of higher prices. And so here, this cause here got us up to this 400 level, and then a smaller, what we call reaccumulation count right here. This area confirmed it, and we call this a stepping stone confirming count. And those are really sweet when we get them, because this is like a double confirmation of the ongoing trend. So this was a really good, very robust upward trend. And we got three conditions here at the highs. We got an overbought condition because we threw over the top of this trend channel. Yeah. So that's a climactic surge right there, Dale.
Right.
And we call that a throw over. Right. So that's a classic condition of a market that's just becoming overbought and overheated.
Do you wait for it to re-enter the channel for a signal?
That is a really that's a really good thing to do, is to wait for the channel. I've been known to take right on the counts and usually White Coffeeans do things in tranches. So I might take a single tranche there and take another one as you come back in, take another one on the test, and so on. Okay, and so now here's the thing, Dale, is that the big question becomes, does this mean that we're done, this move is done? And I think it's more likely, and I have a reason I'll show you in a second, that I think what we could do is just hang out here for a little while and sort of see this index recollect itself for another move. And I'll show you why. And so, here are the
How about 3 to 5% correction from here? Is that viable? And then we go again?
Sure. It could look something like this, which is in the fall of last year, or this or this. And let me show you a bigger picture now. This is daily data, and this count here, early 2021, on the NDX counted up to 15,350, which didn't quite get up. Very close though. And notice how it threw over here and then turned right back in again. That happens a lot in point figure. Right. So then, in this chart I had said we may have to count this area right here. And so then an interesting thing happened, which was this is July right here. We built this new cause. So reaccumulation confirming count. And here we are back up to the high here. But look what we have. We have the two confirming counts on this larger scale.
All the way
and
up
they
there.
More or less match each other.
Yeah.
And so we may have to spend some time in here, but like you said, 3 to 5%, which is certainly manageable. And then off potentially we go to these higher objectives. So this, I think, is a very interesting place. I'm wondering if we don't have to get through the end of the year. And part of that is, there's going to be tax selling and, people taking profits.
Well, maybe tax. Yeah, there you go. The tax selling could be different this year. It's about people taking profits, not just harvesting losses because they're afraid of higher taxes next year, right?
Exactly. And they may have to raise cash to potentially pay some new type of tax, so that's very possible. So now I kind of want to get in a little bit into the inflation trend, and sort of the big question that I think is at work here is it transitory or is it ongoing? And so I'm going to have to sort of weave through this a little bit, because I think there might be sort of like two different cross currents at work here. But the CRB chart I put up on December 31st of 2020, and the CRB was up like 43% in 2021 so far. But this count down here, the yellow shaded count, got us up to 212. And then I said, well, we may have to take this bigger count. And it's a very deep V bottom. And so it's a very wide count, but look at the objective. And unfortunately, let's see, I've got this little thing here that's kind of in my way. Okay. So 216 to 258. And here we are, October 26th. We hit 241.18, so definitely a hit. And so right in the middle of that upper range. And the interesting thing, there's a lot of energy in CRB also. So we have sort of hit the wall in the CRB for the moment. And so just zooming in now, and let's see. So zooming in, here's a daily vertical bar chart of the CRB, and look at this advance here from May to really the present yesterday. And you can see, look at here, we have the throw over, overbought, throw over, comes back in, and we fulfilled a point and figure count. And now we've made this sort of a
failing rally here. Is that
failing rally? It's pretty crappy looking to me, using a technical term. And
yeah, that's technical.
Yeah, very technical. And so I I see this upward striding action here, which has a lot of Wyckofian characteristics. And so we always look for a buying climax and an automatic reaction to set the range. And we often, in a really bullish market, will get an uptrending reaccumulation. So it has all the elements in it. And I thought, well, this is good. Let's count this because it has these elements, and it gave us a count 230 to 249. And of course, we hit this 241.18. Could still hit 249, but we're in the range. It's a pretty big range because this is a pretty wide spreading structure. But
pull back to 230 likely. Is that what you're thinking here?
Yeah, I think that's a very, very likely that it could just be. Now, what we really need to see to confirm that we're in a corrective mode, which could be just a trading range, is we need to see one of these things, an automatic reaction. Buying climax, automatic reaction. Now we have a range bound condition. We kind of don't have that yet. But I think that now, so near term CRB might be ready to pause, and I see some conviction coming out of Washington that maybe oil prices are too high. And that might very well be that we actually see some pushback on these upward trends for oil.
With the release from the Strategic Petroleum Reserve.
Exactly.
Right?
Yes.
We talked about that from a month ago. He probably does it, next week, right in front of Thanksgiving holidays. So when people are driving, they go, "Oh, see what the president did."
Good call.
I'm still paying the same for my gas. That's
Good
what
call.
they'll discover.
Yeah. Well, so here's crude oil. Now, crude oil is a big part of the CRB, but you can see this upward trend. And this is a chart I did on January 13th of this year. And this count took us up to 85.12 to 112.48. And look where we got to, 85. Yeah. And so, and then you can see what's happened since. So here's that 85 back down into the mid part of the channel. I think that oil might just be, again, in a trading range of sorts. We'll have to wait and see whether we get a new reaccumulation. But oil just works so well. I've been following crude oil with point figure analysis forever. And it's just one of the really great markets for point figure work. And look at this structure here, and look how it counted down to 760 to minus $3. So, and it went right to 760.
What does it look like now?
Well, I think it's a little too early to count this. We have to wait and see whether we build some kind of a cause. I think that I would be looking for some kind of a cause for higher prices. Okay. And but I think we're just in the process of correcting right now.
But do we have any X's and O reversals from 85?
We would on.
You're showing the target of where it could go to. I'm wondering what it looks like now.
Yeah. So if you go to a one box reversal chart, which I unfortunately don't have here, but that would show a reversal down from 85 down to 77. So that would be about
we fulfilled it already.
6 box decline. Off of this peak.
77, I think, very close to it.
Yeah. So I do think that we could just build a big old count here. And I think it's too early to tell. Like, you look at this, you can see, oh, there's a really nice cause here. for a big decline, and it's exactly what we got. And this rally up to 65 set up a really cascading drop. And we were able to estimate the potential downward, which was substantial. So really what I want to get into a little bit is just this idea of, well, is inflation transitory? And I know that you all are really on top of sort of the short-term trends in these different commodities. And I thought, well, I've been watching these from a really long-term perspective for a long time. And look at this cause built in copper. And there's, there's a lot of concern. I have friends that are in the construction business, and they tell me how much copper prices have gone up. Well, this structure here, accumulation structure, if it is that, goes back to 07. I mean, it's huge. And so now look what's happened. We have in a white coffee in terms this what we call a sign of strength, because this area here has taken out all the prior peaks of resistance here, including this very important
highs.
And it's gotten up to 480. This count of this turquoise area goes 530, and we've pulled back. Now this chart is through October 25th, but this is what we call a backup. And so often it'll do that after it jumps out. And if it gets real dull and narrow up here and doesn't show any capacity to turn back into the structure, that is bullish. And so we really, now me from the perspective of inflation, long-term inflation, I would love to see copper just sort of get back to this resistance line around 420 and then just go, maybe even go back into the trading range.
Okay,
but
so
nobody calls me and asks me what I want, in the markets.
Yeah.
So
but you have preferred narrative, so you're prepped. If it happens, you execute. Which numbers, Bruce, are you talking about long term? The 1480 to 1550, or you get both? A more powerful cause could take it to 2380 to 2450.
My experience is this: that what will happen with point and figure is these become stopping points in the ongoing uptrend. So you could go to this level. Heaven forbid we start to rally away from here. You could go to this level, which would be just a huge move, and then you could spend. A point figure won't give you time; it'll just give you projections. And so it could very well be that it could spend a year or two just hanging out in this area right here before it builds a new cause that reconfirms the higher level. But you can imagine what this does to inflation to see copper go from being really in a stable, steady, non-volatile structure since 07 and before, and now all of a sudden it's in a trending mode.
Yeah, you're going to have to hire security guards to guard your plumbing.
Yeah, exactly. Yeah. Well, like I said, I've got friends that are in the industry that just tell me amazing stories about how fast copper prices are going up. And so now, is copper the only character in this play? Well, look at natural gas. So natural gas, which is, really a tricky business. It's tricky to trade this, but it has a kind of a family resemblance to copper in terms of it having, and I'm a pure technician, it's like I just look at the charts and trade the charts. But here, look at this. This is just really classic. So we have this run up from support at 175, and it runs up to 6.25, which seems like a big old move, which it is. And then it goes into a range bound condition. And if now this chart here is through October 25th, but look at these segments. I've just basically identified these different segments that go out, and you can see here in a stair-stepping fashion. These segments go up as high as 37.25 from this level here. Now, my preference would be to see them just see natural gas just consolidate here and maybe even come back in again for the sake of our economy and so on, and the world economy. But like I said, you know, we have to really acknowledge the fact that this could be a very large accumulation structure. And if it starts to trend away from this area, see, every time it's gotten up here before, Dale, look, you know, it just goes right back in. And so this is typical of a base or an accumulation. This time so far, not the case.
Yeah.
And so that is a classic characteristic of the completion of accumulation, is to see that. And so if it starts to scale away in an uptrending fashion from this, this will be what we call a change of character. And a change of character from this trading range into a trending structure now puts in play these different upward objectives. So this one here takes us 1150 to 1250. And so that would be, that's the way I trade them, is I just go, okay, how do you eat an elephant one bite at a time? And
so the first one,
yeah, let's focus on one at a time. Just be a trend follower.
All right.
Okay.
Great presentation.
Oh, thank you. So here's now, but wait, it gets worse. So here's nat gas back to 01.
Yeah.
And so what we just looked at is this area right here. And so let's just go even further. And so there's just in here, look at this big spike up into 05, 06. And we all remember what energy did back then. And that went up to that 1560 area, which this count in green is a reconfirmation of that. And so that would be a classic place for resistance. And we have a count that counts to that. So that's fascinating. So, and then, and of course, Dale, you just got to cut me off when you're run out of time.
We're getting close.
Yeah. So
I saw cotton too. Wow.
And so cotton is interesting. Yeah, cotton's interesting because it's up and out. So here's an example of what we talked about, where it got up to the resistance area, consolidated, did not come back in again, as it had done prior times back to 2012. And prior times, it just went right back down into the trading range. The accumulation this time, it didn't do that. And then it just came out of here really sharply. And now this is a recent reading here, 119.70, which is like right there.
So Bruce, I know you're a technician, but I also know that you probably think about things outside of the charts. And, you know, what you're showing here is, you know, something that is far from transitory. Maybe we should start using the word entrenched. Yes. With perhaps parabolic price increases across the board for commodities. And I know the Fed, if they wanted to, could have an impact on industrial type of commodities by tightening. But when you talk about agricultural commodities, you know,
I've actually been working on those.
Mm-hmm. Yeah, tightening doesn't take down the price of corn and beans and coffee and sugar and all of that. It could take down, you know, copper and oil and economically sensitive commodities. So do you think the Fed is going to be forced to tighten next year because of what you're showing on the commodity side here?
My experience with the Fed is the Fed always is way behind the curve, you know, sort of their MO. And
yeah, they are now, don't you think?
And I believe them to always be. And so now, as they start to call it taper and cut back on QE, which we have to watch to see whether they pause doing that if the market convinces them to. But here's the conundrum that they're in now, is let's say that inflation and let's say it's 6%, you know, so just overarching inflation is 6%, and interest rates are 1.75%, you know, for the risk-free rate, so to speak. they have to get interest rates up to where the inflation rate is to really have an impact. And so think about what they would have to do to be able to get interest rates up to a level where it would effectively stop speculation, because a big part of what's going to happen in commodities is just speculation. Because if inflation is 6%, the CRB went up 41% in 2021 so far, and the Fed's at 1 3/4, and they have to get to 6 just to get to just the overarching inflation rate, which a lot of people would argue is higher.
Yeah.
People are going to just keep speculating. They're going to speculate in these assets that give them a real return over the rate of inflation, and the cost of money is nearly zero. So this is really the big, I think the big issue for the markets is, you know, this is you just get paid to speculate right now.
Okay. A really nice looking work again, Bruce. You always bring in things that open my eyes and you know, makes me think about targets and big picture stuff. I really enjoy your work. And
well, thank you, Dale.
Yeah, I appreciate you having a giving spirit and sharing it with our community. And just want to thank you. The best way for people to follow you, Bruce, is where?
They can follow my blogs, my videos, and I do a lot of this work there. And I also do some shorter term market work, and so
Okay.
and it's all free. So
yeah, your website, right?
Well, it's at stockcharts.com.
Oh, stockcharts.com. Okay, yeah.
Yeah, and so my blog is there, my videos are there, Stock Charts TV.
You're all in the fraternity now.
I'm all in. So,
All right.
but it's the most fun I have is coming here and talking to you guys. So
No kidding. We appreciate you, Bruce,
Well,
and your work and your your experience level. You know, you can't learn it, but you can learn from others that have it. So thank you very much, buddy, and have a great holiday season, and we'll do this again next year.
Wonderful, and have a great holiday to everyone.
All right, thank you very much, everyone.
Take
That's
care,
Bruce
everyone.
Fraser, and you could find him on Twitter at RD Wyckoff, and at his go to stockcharts.com, a great site. David does shows on there, and they have every top A-lister trader analyst on there on stockcharts.com. So that's a wrap for today, and I'll see everyone tomorrow. You could join the team in 13 minutes for the morning edge, and I sure wish I knew what Steve Volge was thinking and what Blake is doing right now. I wonder if Amanda's checked in. So good time to join, guys, and I'll talk to everyone tomorrow. Remember, don't just count your pips, count your blessings, and we'll see you. Good hunting today. And I'm signing off for the best team in technical analysis and trading on the net. Adios.